It is. It is the best performing asset, and I think it's going to be the best performing asset if we look out 3 to 5 years. I just think there are challenges that we face now. If you remember, I was on your show early January. I said this year was going to be 0 to 10, and I was the biggest bear in this group of roundtable. I still think it's going to be there. I think rising interest rates are going to be a challenge. I think corporate profit projections for 2019 are too high. We had a great year this year. And Friday we're going to get GDP. I think it's going to look good. I think it's going to be in the upper threes. But people I look at now, fourth quarter, in the twos, maybe 3 next year. How do we get 12, 13% profit increases, out of a 2 to 3% GDP? And I think that those interest rate profit challenges are going to be keep stock prices muted for this coming year.
I don't know, Professor, if you remember, you were on September 25th on Squawk Box, and you said, I'm expecting a correction near term, similar to the one we saw in February. That was a good call on September 25th. So, you get sometimes I've heard people joke around that you're a permabull, but you actually said interest rates and trade worries could cause a 10, 15% correction, and you said that in September. But then in 2019, you're not the Jeremy Siegel that you have been for 2019 either, are you? I mean, you're looking for kind of a flattish year.
Yeah, I'm looking flattish. Of course, we got resolutions, we got the midterm elections, we got interest rates, we got trade with China. Certainly the midterms and what's going to happen in the trade with China, something's got to happen in the next 3 months. Will happen on that front. How is the Fed really going to engineer a soft landing? When you look at charts of unemployment spiking down, there's not many soft landings. So there's going to be a wobble at best. And with rising interest rate, that presents a thing as, where am I really want to move into stocks? Now, we've talked about the fact that the sell-off in emerging markets has, I think, presented unbelievable values. I will admit that I've been catching the falling knife and my fingers are bloodied here. Wow, it's what is it, 10, 11 PE ratio there. So I think looking international, even though I know how it's done, may offer you more value looking forward than the U.S. in the near term until we see some of these resolutions.